Hello and welcome to Trading or Growth and Value Stocks. My name is James Boyd. We welcome you here on this January 21st. We have Connie Hill in the chat. You'll see her initials as CH. And if you're a returning user, welcome. If this is your first time, just know that you're welcome, and also welcome to a great group of investors as well. Now, this is not a one-off class. We meet each week, and I'll share with you some links you're going to want to bookmark as we get started here today. Now, just real quick, Connie and myself, we do post educational content on X, formerly known as Twitter. There's my handle. Connie will post hers in the chat. That way you can click on it and just follow her as well. So check that out. Now, just real quick as we get started, this class, we're going to talk about really growth and value. Today, we're going to talk a little bit more about growth, okay? Now, our goal is we're going to use fundamental analysis, okay, and technical analysis and combine it and try to make an investment decision, okay, and look for some setups. Now, just real quick as we get started here, we'll talk about the information that we bring up. It's provided for general informational purposes only. Should not be considered an individualized recommendation. They're examples. Also remember that we'll use the Paper Money software application for educational purposes only. When we talk about, or if we bring up dividend-paying stocks, we need to understand that those dividend-paying stocks, the companies themselves, can change the dividend policy. And so it's not infinite in time. The dividend can change over time or be cut completely. Also understand when we talk about investing, it involves risk. So things like position sizing, setting stops, things like that. How do you try to protect yourself on risk? That is key. Now, also here today, I want to take a look at yesterday, Tuesday. We started the week thinking the U.S. might try to maybe go for Greenland. Sometimes people's fear is not always realized, okay? Sometimes news is just news. And today there was kind of a little retreat based on that idea, okay? Sometimes we can take it a little too far, can't we? And so the biggest actually thing is I want to kind of talk about the market's reaction, what's actually holding up, and I want to talk about some areas in terms of growth that actually might be trying to get a little push here that we could actually bring up as examples. Now, just real quick as we hop right in, let's talk about the SPX first. So the S&P 500, whenever we talk about these gap downs, and I'll share with you this chart in just a moment, you're going to see that we gap down. I mean, here we closed here, 69.39. We opened up yesterday, 68.68. Today, I mean, it's not quite a bullish engulfing candle. It doesn't have to be. If you actually close above yesterday's open price, that's the first level resistance. Now, remember, when we've talked about technical analysis, when you get a gap down like that, that 68.65, that's your first level. You get up through 68.65, your next level is the 10-period moving average, as shown there, 68.83. And anything past that, you fill in the gap. Super important. These moving averages are whole moving averages, so the bar is a lot higher. When we actually go back and take a look at this in terms of like a moving average that is more standard, a 30-day simple moving average and a 10-day exponential, you're going to see that we've kind of fallen back down inside this consolidation range. You're going to notice something here. Recently, investors, when we had sell-offs, investors maybe thought, well, some investors bought, and they might be thinking, geez, if I'm a value investor and I'm trying to buy stocks with lower prices and fairly good earnings or sales, this is when investors tend to try to buy. When the candles are red and price is compressed down to support. Oh, we talked about that yesterday. It's scary. Well, that's actually how you get a potential sale or a deal, perhaps. That doesn't necessarily mean it's going to go up, but the price is lower. Now, behind the stock ticker symbol, we want to actually look at the business, balance sheets, income statements, things like that. All things that you would want to find out before you married the person as well, okay? Now, just real quick, when we also take a look at the NASDAQ, I want to pull this up. NASDAQ has really been the softest with the news yesterday, which broke. We saw it actually break down. The one area that has been Mr. Brightside, if you will, or Mrs. Brightside, has been the semiconductors. Now remember, as we've stated, it's not just semiconductors, it's memory usage as well. Can anyone actually name any semiconductor stocks that are getting a little bid here today? When we also talk about, let's say, the memory, the SanDisk, okay, that has also continued to pop. I mean, who's counting, right? Another 5% here today. Why not? Okay. The other ones to kind of keep an eye on there is WDC, which has kind of stayed above that 10-period moving average, which is a foundational concept. And its twin cousin, STX, just kind of punching along here, okay? Yeah, now the big thing, I'm glad you just jumped right in. Micron, what a horse this has been. Now, I don't know if you've been watching, but remember, if you're talking about a bullish investor, they like to see these little pullbacks where they're only orange colored candles. And boy, Micron has really had 3 days or less of orange colored candles, which is signifying strong, help me here, that's right, momentum. All right, so here's the thing. There's some opportunities here. Could there be more? Now, let's kind of break this down. Name, just real quick, when I pull up the Russell, okay? The Russell, if I just kept on this chart for just a sec, fell down to this rising upward trending moving average. I know you're like, I want to pull back to the moving average. Well, did you just get it? We actually see here today, we see the green dots again. What do the green dots signify? Well, that is what we call your classic bounce. Bounce meaning we're actually closing above or trading above yesterday's high, and you're actually going to see that we're actually getting one so far today. Volatility, which we actually mentioned yesterday, well, sometimes that volatility doesn't always last. And when you actually look at that volatility, we went to north of 20 yesterday, but today kind of compressing. This goes back to sometimes that fear that's out there, it doesn't always last. And the fear is sometimes for many investors, the opportunity to buy. Now, super quick, gold overnight, when we just kind of pull it up real quick, did we hit 5,000? Can I get a 5,000? Not 5,000 yet. 48.91. This plays obviously in the precious metal stocks. Silver, not up as much as gold overnight. I mean, punching almost 96, okay? When we also take a look at crude oil, keep an eye on crude oil. Why do I say that? Well, we saw the energy sector here today went to a brand new high. So let's stop. Let's kind of take some inventory. Small caps continue to be a theme, okay? Stronger than NASDAQ. When we actually also take a look at, let's say, what we're seeing on gold, we call that a precious staple. In the world of sectors, we call it consumer staples. We're calling the precious metals a precious metal staple. Some people just want something that maybe is not as correlated to the stock market or exposed to the stock market per se. Those precious metals continue to get a push. It's on the price of gold itself and silver, but it's also the precious metals. The big actually thing we also have to take away is the semiconductors. If you looked at the performance of the semis compared to the NASDAQ, it's not even a comparison. So here we have an industry group inside the NASDAQ that is really leading, okay? All right, now I want to let's take a quick look at a couple stocks here, okay? Now, by the way, if we said, hey, can we go to analyze just real quick for just a moment? Excuse me, let's go to scan for a quick moment. Let's go to Stock Hacker, okay? What I'm trying to do is get a sense of maybe semiconductors. Now, before I do that, let's back this out for just a sec. Let's go to MarketWatch. Let's go to visualize. Some people are visual people, okay? Now, MarketWatch, visualize. Okay, so that's not too bad. You can do that, okay? Now, on the left-hand side, you're going to see indices. Well, if I clicked on indices and I said S&P 500, we've seen this before. What we're interested in is if you're just kind of more of a picture person, which most people are, could I just click on the S&P 500 and say, if I like technology, okay, and there's many people that do, if I like technology, can I just go cherry pick and have an immediate list? So we went to MarketWatch, we went to Visualize, S&P 500, and just said, give me information technology. Now, if someone said, give me a list of stocks that are on the S&P 500 that are semiconductors and equipment. Here, oh my gosh, don't even look at Intel. Don't even look at it. It'll make you sick. Now, the big actually thing is we want to kind of pull out here is anything that we're missing. Well, we mentioned the WDC. We mentioned the Seagate. Historically, we called it Seabiscuit. And there's SanDisk. So you can't say this stuff's hiding here. It's just poking us in the eye. The question we want to kind of go towards is, what about AMD? What about like ADI? What about ON? Now, ON is a small little section. Now, why are some of these boxes bigger? Well, it's based on market cap. Market cap, number of shares outstanding. They don't have an infinite number of shares, these companies. They take the number of shares outstanding that they have times the share price, current share price. The bigger the box, the bigger the market cap or the total value of their equity. Okay. Now, I want to kind of start with these stocks, AMD, ADI, and ON for just a moment. All right. Now, let's take a look at this just really quick. Now, I want to pull this up. Let's start with just for a moment ON. Now, if I were to ask you a question, what type of price pattern do you see on the chart? Do you notice anything? Now, guys and gals, if you came today and you didn't think you were going to have a little fun, you're sorely mistaken. One of the things I love investing. I love the charts of it. I love the numbers of it. I just love it, okay? It doesn't mean they always work, but investing is very interesting, okay? And also the biggest actually thing is when you have a group of people who love it, it just makes it special, okay? Now, if I went back for just a second, let's go daily just real quick. Let's go to 3-year weekly. I just want to kind of get a sense of what's going on. Well, if I said to us, hey, where do you see resistance on this chart? It kind of looks like the old resistance that we had was maybe somewhere right around, you got a floor there. That's where we actually hit one time there. You're going to kind of see that we're right at that mark. Now, we might say, hey, we kind of see a pullback area, consolidation, run up, and kind of a little maybe flag or higher low. Now, we got to ask the question, is this maybe trying to get out of a cup and handle type pattern? Now, Mega says uptrend with RSI. Okay, we sure hope if it's going up, the stochastics, the CCI, RSI would be going up, else how is it going up, right? So the biggest actually thing is when we look at this, this might be a name that's trying to play a little catch up to its other companies in the industry group. When's the earnings coming up? The earnings is on February 9th. Now, a lot of people, they look at earnings and, oh, no, earnings are coming up. Remember, we've said before, we'll say it again. Look, when you're 3 to 4 weeks prior to earnings, that is when you're watching those stocks because you're looking to see our investors starting to speculate what might happen with those earnings. How early? About 3 to 4 weeks prior to earnings. Now, what we're going to do is if we zoom in on this and we said, okay, where do we see short-term support? Meaning, where did the stock pull back to and then bounce back up? Where did the stock go down to? Bounce back up. Well, we got 2 recent examples. Well, if we take a look at this, we see that it really ran to the upside and then pulled back to here. That's touch point 1. Ran to the upside, the moving average, fell back down, went right to there, and then bounced right back up. Now, if we kind of said, what letter of the alphabet does this look like? The answer is W pattern. Now, why do we care? Well, that's your classic double bottom. This allows investors to say, look, if we go below 59 and change, I want to get out, the investor says. Second, if we actually get above the middle of the W, which we're trying to here today, this in the short term would be a higher high. If you make a higher high, the highest higher high, the highest likelihood is a what? Type it in the chat. That's 2 words, okay? Now, what we're going to do in this case is I want to actually go back to this chart. Let's go to the weekly for just a moment, 3-year weekly. When we look at these prior areas, let's wonder if this actually is able to break what might be the path of least resistance. 66 and change, kind of the next level probably in there might be, if we kind of use the top, maybe 76. If I was conservative, if we were just doubtful people in general, like I'm skeptical just naturally, okay, probably right around about 71.50. Now remember, as traders, we're kind of always looking for maybe 6, 8, 10% upside to maybe mirror what the risk might potentially be. So trade example number 1 that we're going to do here is we're going to pull up the paper money account. So first off, we're going to go to the trade tab, okay? Going to go to the trade tab right there. And now what we're going to do is going to type in ON. Now, once we type in ON, now this is not that bad when you think about this. I want to do a trade, so go to the trade tab. The information up at the very top is going to be the stock information. Last traded price, net change for today, ask price, and so on. What we're going to do is we're going to right click on the ask price. This now gives us a menu. Now, once we do this, we're going to go buy, sell, buy custom. Buy custom gives us the menu of saying, do you want to buy the stock and then put a bracket or a target to the upside and a downside? If you're a trader, okay, or investor of maybe 2 or 3 weeks or 2 or 3 months, you might use that with OCO bracket. Now, when we actually do this, let's go back to kind of what that number was on that chart. If we said maybe the midsection there, it's probably right about, let's say, I'm going to say $71-ish. 71.50. I'll take even an example given $71. So I'm going to put that target right here. Okay, right here. Now, day to GTC. All right, there you go. Now, here's the deal. We want to be very specific. This is not how much do I want. This is how much are we willing in terms of capital. What is the budget of what we're willing to do? Well, we said in our examples, if this balance is 153,000, I'm not going to budget more than 5-8% of that total balance. So if I said 5%, we're really talking about $7,500. Now, $7,500, if I did that, that's going to give us more than 100 shares. If we buy 100 shares, we're at $6,300. So that way we can have an even number of shares, 100. We're just going to do, let's say, 100 shares at $63. Got a target price, GTC, good till canceled. And the last thing we really need here is the stop. So if this stock were going to go down, we already know, okay? Let's pull this chart back up to the daily. Where was that? Where were those bottoms again? It's probably right around $59. $59-ish, somewhere right in there. Follow my cursor over, just kind of follow that line to the right, and you'll see 59 and change, 59 and a quarter. So if we take 59 and a quarter, support area, less 2%, 0.98, 2% less than support, it's going to give us 5806. 5806 represents where we're saying, look, if we go below 5806, trigger the sell. What do you mean by that? Well, if we go to that price or less, it triggers to be sold. We don't know what that price is going to be because a stop is a market order. It could be filled at a lower price, especially if it were to gap down. Trade number one here, what we're going to do is going to go confirm and send. And now what we see in this case is we're buying 100 shares, about a 5% stake of the portfolio. Target price, stop. We don't have a commission. Okay, it's a U.S. listed equity here. And now what we're going to go ahead and do is send the order. Okay, now, the comment is just real quick. So let me just share this just real quick. Okay, so let's go back to this chart. If someone said, hey, could you share the chart with the labels? It's still going to have the moving averages on here. So let me just put this in the chat. I'm going to do this in 2 ways, okay? So number one is, if we went to, could you just share that? Yes. What I just sent to you is, now, I like this because it gives us a couple pieces of information, just quick reference. Number one, this whole bars right here, this is telling me how many days the whole moving average has been green. So if I go back, you're going to see in the last, let's say, 2 days, 1 today, 2 yesterday, it's actually telling me that short-term moving average has been up for 2 days. The green background meaning green moving average, and the 2 representing the number of days the moving average has been green. Many investors like to see that. Why? Simple reason. If you went back to it, oh my gosh, oh, I can't even look. Oh, it's so painful. Oh. Have you ever sold a stock and right after you sold it, it went up higher? Can anyone just tell me, James, you're not the only one? Please, don't leave me hanging. Okay. And if you don't tell me that, you haven't invested long enough. Anyway, we got earnings coming up here, and you're going to see that it's tomorrow. But some investors, let's go back to the Christmas stocking here, maybe thinking, let's kind of put a little bit more in that Christmas stocking here as a little, going into January, someone is thinking maybe those earnings might be a little bit better than expected. Why does it matter? Well, what happens if you actually have the whole moving average bars 19? This is 19 days in a row of where the whole moving average has been green. If you notice when the positions are making money, the whole moving average tends to be green. When do you tend to be losing money? Oh, simple answer. If you look at a stock like Adobe, the whole moving average bars has been, number one, the whole moving average is red. It's been down for 7 days. And which ones are in the portfolio aren't doing very well? Simple answer. It's the ones where the price is below the moving average and the moving average is red. There you go. So what's the point? The point is the investor is trying to hold the ones where the moving averages are green. Okay, don't make this complicated. Now, here's the deal: is when we're looking at this, if we have something that was green that turns red, you can get stopped out, or there could be an exit signal, like we talked about yesterday. So, but the moral of the story is we're trying to have the ones to try to have a higher probability that if the paper money account has those, that they could go up, hopefully, as the trend maybe continues. Now, I want to go back. I want to bring up just real quick financials for just a moment, just really quick, okay? Well, what I want to do here is, so first off, let me share with you this other chart, okay? So we have what we call a package of charts. Let me just share this with you if someone asked that in the chat. These are charts that I like. These are charts that in a class setting we use. And so there's different reasons. We think of each chart like a tool in a toolbox. There's certain reasons why we'd use those charts. And I've talked about that, but that link I just sent you is for the package of charts. Now, I want to go to just real quick one spot. Let's also make mention. If you say, James, where could we see these classes even if I wasn't on a computer? Are you ever not at a computer? Okay. People have iPhones. They have pads or tablets. If you had YouTube on those mobile devices, which I know you do, okay, if you just went to Trader Talks Schwab Coaching Webcast, I'll send you this link. If you have not subscribed, you're going to see right dead center in the middle of the page, you're going to see that where it will say subscribe. Now, if you ever said when I subscribe for free, you're going to also see that if you wanted to learn any information about things that we've talked about historically, you can search, okay, different topics that we actually have posted on our YouTube page. So if you haven't subscribed, it's free. And if you want to learn about different topics and different playlist of things you would like to learn, man, it's right here. Just come get it, okay? Now, let's also go to just real quick. I'm going to go to the schwab.com, okay? I want to talk about two financial companies. Now, one of the reasons that when we use the platform, the software that we've been on, there's reasons to use that. There's also reasons to use schwab.com. There's some different tools there, okay? Now, what I'm going to do is I logged into schwab.com and I just typed in, I'm going to start with example given USB for just a moment, okay? Now, I want to kind of show us some functionality, okay? Now, if I type in USB, we get US Bank Corp. Now, if I click on that, US Bank Corp, click on that, it's going to give us some information about the company. Now, remember, we're not just buying ticker symbols. We're looking for businesses that bring in and make money, okay? What's the favorite topic? Money. Now, if we take a look at this, when we actually scroll down, I want to just kind of show us some information that some investors might be looking for. Any news that's out there, we can see that there. What about, for example, and some people like news a lot, dividends. Now, a lot of us investors have money. Must be tough, okay? Some investors like to know that maybe could the stock go up? What's the recent performance on dividends? But also, where has it been, let's say, historically? So if I actually go back, let me just go back and show that. A lot of people like to do this. I just want to bring it up. Right here where it says show more, click on show more. And now what it's going to do is it's going to show us calendar year dividend payments by X date. Now, the thing is, what you're going to notice is the stock price over time and the regular dividends in that histogram bar there. We can see it there and there and there. And you can see historically what have those payments actually been, quarterly basis and yearly basis, right there for us to get. Now, the other thing what I want us to notice if we scroll down is we see about the earnings. The earnings is important because where do the dividends come from? They come from the earnings, hopefully. And you're going to also see if we scroll down, we could see what was their estimate and their actual. Very important, by the way, okay? I mean, we want to know that the company is growing the sales or revenue of the business and their earnings of the business. The earnings is important because that's where the dividends come from. Sure hope so. And that earnings could also be that they could acquire other businesses. They could increase their assets, equity, push down their liabilities, debts, and so on, but also maybe buy other businesses and or create new products and services themselves with actually internally generated capital from their own business, not borrowing. So it's really important. Now, the other thing that I really enjoy about this is seeing their peers and their ratio comparisons. Now, when you're buying companies, you like to kind of this looks like housing, okay? Now, let's say that you and your spouse were going to go out and buy a house. You go into the neighborhood, you like Park Avenue, whatever it is. Well, you're probably not just going to look at one house in a neighborhood. You're going to look at some others. Same idea here. Now, US Bank, we're going to start here, okay? Why? I'll show you. But one of the other ones has kind of gone up there as well as PNC. Now, there's a couple tabs we want to be made aware of, such as, this just gives us overview, okay? Market cap size, they're all pretty similar. Price to earnings, what are their dividends, EPS growth forecast. I think a lot of investors, a lot of people say, well, where do I find growth stocks? Where do I find growth stocks? My gosh, this would be a good place to start, okay? It at least starts with a projection. It doesn't mean that they're going to hit it, but boy, that would be really important to start there. The other thing is if we're saying that earnings per share growth forecast is looking at net profit margins, okay? The higher those net profit margins, that could also be fueling the growth as well, vice versa. Now, what I'm going to also do is when we went to valuation, we could see things like PE, price of sales, price to book, and so on. We could also, for example, see in this case, fundamentals, okay? You're going to see like there's profit margins again, return on equity, which is very huge comparing net income to equity of the business. We also see dividends, which we've hit. How much are they paying out of the net income? What's the coverage ratio that what they're paying out, what the net income is compared to what they're paying out? The higher, the stronger, okay? Profitability, all right here. Now, the one thing I do also want to point out is, would you ever get married? And this is a question for you, and I want to make sure you're listening. Would you ever get married if you didn't know the balance sheet of the person that you were marrying? What are their assets, liabilities, equity? What's the income statement? How much they bring in versus what they spend? Guys and gals, this is very important stuff. We can't just gloss over this. So, of course, if you're marrying that person, you would want to see that we go from right to left, and we want to see that these numbers over time are going up. Guys, ladies, would you say that's what you'd probably want to see in the spouse or in the combination of the two? We'd like to see where that number is actually going up, and that total equity on the bottom is increasing over time. Am I missing anything? We'd also like to see that actually over time, when we look at the income statement, we would like to see that he or she or the combination of both is actually, that income is actually going up over time. And that when we actually look at the net income, that we actually see that that net income number is rising over time. You get what I'm laying down, right? Okay. Now, if we also take a look at this, we'd ask ourselves the cash flow, where's the money coming from, right? Is it coming from operations of the business, like the day-to-day of the business? Is it coming from investing, maybe buildings, land, maybe treasuries? Is it actually coming from, let's say, investing in other companies themselves? Or is it financing? That's not a great source. We'd really like to see number one, operations, the business itself, and the investing Financing, not as much, okay? That's typically not sustainable. I want to show you this because this is very important. We want to know that underneath the hood of the company, this ticker symbol, that there is a viable, pumping, and thriving business. Now, I want to actually pull up these charts for just a second, okay? If we pulled up these charts and said, why did you look at USB to begin with? Well, because a lot of us actually look at these financial companies. Financials, really for the economy, is the oil to the engine of the economy. I mean, without liquidity, what could the consumer or the institution do? Not much. So it starts with the health of these businesses, okay? And are they willing to lend? Now, the first thing what you're going to notice is we went through the earnings yesterday, and they had 126 actual and 119 was the estimate, okay? Now, we also see they recently paid a dividend. We could see that there. Now, if I went back to the weekly chart just real quick, 3-year weekly, you're going to see that this kind of has that continuation pattern. Now, if we go back and say the continuation being the prior high, that prior high top, can that become the new potential floor? Maybe. Now, let me show you different stocks just real quick to compare and contrast, okay? So you're going to notice the same type of pattern on this chart, meaning you're going to see that we have a low right there, and we actually have a low right there. Fair? Double bottoms, okay? Now, if we take a look at this, low, run back to the upside, fall back, you see that? That classic double bottom, okay? The middle of the W is right around $56. We went up to 56, got a little nervous, and prices fell back down. Moving average crossover trying to happen here. Now, one of the tools that we like to look at, and I'm just going to make mention of it right now, the second graph from the very end on our series of graphs that I've shared with you is a lot of times investors like to say, James, I'm trying to buy off the blue moving average line, and I'm maybe trying to buy up to the yellow line. The yellow line is 3% above the blue line. Okay, when you start buying at the red line, 5% above the 10-period moving average, white line is 7%. I mean, now you're getting a little elevated here, okay? So a lot of investors say, look, if I'm going to buy in an entry signal, I want to buy between the 10-period moving average and the yellow line, closer to support. The thing is, to get a signal, it has to go up to create a signal. Does that make sense? So that's why people always tend to be buying off the moving average a little bit. Now, I'll come back to USB in just a sec, but let's compare and contrast just real quick PNC. PNC is in the same group. A lot of people like to say, well, I'd like to see a crossover. Give me a crossover. Well, it just so happens they got a crossover, okay? Now, if you take a look at PNC, where's the crossover? Right there. Where was the old resistance? Right there. Where was the old support? Well, you got a little yank down right there, run back up. A little yank down right there, run back up. This is a little bit more at a diagonal, a little bit. Some I actually might say 210 being the support level there. Or if someone said, James, I'm going to take my stop underneath this moving average right there, which is right around 219. Now, I'm not going to take the time to go through the fundamentals on this per se, at least on this example, but are there any, if we had to choose one between PNC and USB, which one would it be? Which one? Now, some investors might say, James, I have a lower dollar account. I would pick the one that actually maybe has a little bit more, it's not priced as high. Noted, okay? If we actually said that, let's say that that's kind of where we are, okay? Let's say the investor said, James, I'm going to try to buy some of the shares right near. Now a lot of investors, that sometimes they're uncomfortable putting a whole position on at once. Okay, fine. Let's say we said, okay, we normally buy $7,500 worth of stock. I'm not going to buy the full position. I'm going to buy half. I'm going to show some commitment now, and then I'm going to say, look, if it goes up to this price, I want to buy more, the investor says. All right. Now, let's do this. And I'm just going to make mention of where the investor might buy on the second entry. We're going to right click on this chart, which we can, on a stock trade, we can just right click on the chart where we were trying to buy the shares. Go, there's the menu again, buy custom with OCO bracket, click right there. And now what you're going to see is, so remember, if I right click down here, right click at $48, right click, buy custom with OCO bracket, wherever I right click, that's where the price comes up. So if I right click at this current price, 55 and change, right click, buy custom with OCO bracket, wherever I right click, that's the price it's showing. All right. Now we can move it around if we wanted to. Now I'll come to the target in just a sec, but if I talk about the stop underneath us, I'm looking at the support level. Support really being 53.45 less 2%. That's going to give us 52.38. Now, where's that visually on the chart? 52.38 is going to be about right there. So on that chart, if we knock down to that price that I'm pointing at, we go down to that level, that's a lower low. That's a brand new, that's a broken support, okay? So some investors might say, James, I think of support like trust. And when the trust breaks, I don't want to be in, okay? All right. So they're saying, look, sell. Sell at that price or lower, okay? So we're going to type in 52.38, okay? There it is. Now, in this case, we're going to look at what I'm clicking at. I'm going to kind of highlight what I'm pointing at. When I click on those balls right there, click on it, it goes to percent. Click on it again, it goes to a dollar amount. Now, when I do that, we're going to type in a half position, and it's going to be really 37.50. So when I do 37.50, it's going to really say, look, if I had a capital budget of $3,750, and right above the dollar sign, you're going to see there's a little red icon. Let's click on that red icon. What it does is it tells us how many shares can we buy based upon $3,700-ish. Answer, 67 shares. Anybody have any questions on that? Now, I want to do this faster, and what I'm going to do is on this, just real quick, US Bank. How do we do that again? Let me put that there so we can follow along right in the paper money count. Click on the pool balls. Click on them again at the percent. I'm going to type in 37.50. All right, that's not that bad. So that's the capital budget, okay? Now, if I click on right above the dollar amount, you're going to see the red icon. Click it, and it's going to snap in there. How many shares would that be? Once we know the number of shares, we could actually really kind of go back and just say, click on it again and just type in 67 shares. Kind of just does the math for us. Now, that number again, what do we have as far as the stop? 52.31, 52.38, excuse me. And I'm going to type in that number, 52.38. There it is. Now, we're going to go dated GTC. So remember how that stop works. If it goes to that price or less, it triggers to sell, okay? Now, if we went back on this and said, okay, what is the potential target? Well, if we go back to that potential target, let's go back to the chart. Sometimes when you look at a year chart, it's the highest it's been on a year. That's not a bad thing, okay? You go back and look at, let's say, a 3-year weekly. We look at this. We don't see anything. Now, for some of you that are, let's say, Fibonacci people, which is using math with charts, you might say, I'm just going to kind of do this as an example. If we were going to say, well, what might be the extension target if the price were to go there? That's an if. If we said, what is the extension target if it were to go there, it might be in the ballpark of $64. That's an extension target, okay? Some technicians that kind of use math with charts, which a lot of it comes back to math, it's at $64. So we're going to put a target at $64. Now, of course, if the company's going to make it there, having the sector going up would be huge. Having the regional bank space going up would be huge. Regional banks have been outpacing commercial banks as of lately, okay? Keep an eye on those. We're saying with companies like US Bancorp and actually PNC, could that continue? Could the trend continue? Put a target there, do data GTC. So this is saying if we go to that price or higher, sell the shares. Okay. Now, let me throw out a question here, okay? Where would you say on the chart that this is not just, let's say you bought a half position. At what point would you say that the trend is confirming? At what price? Well, many people would say, look, James, if we went above 56 and change, that's not a bearish signal. So some people might say, James, can I set an alert on the chart? Yeah, sure. Right click on the chart. Where would you want to be alerted? Well, let's right click on the chart where we want to be alerted. We're going to go now down to create an alert. Now I'm going to tell you this, not having alerts, it's probably a mistake. Okay. We're going to right click. Where do I want to be alerted? Create an alert. And now what you're going to see is we're going to say, look, if USB gets at or above that area of resistance, but I want to know. I'm going to write here, second position, question mark, okay? Because if we go to that price, that means it's a higher high. Let me know. Now, the nice thing is I can set this up to send it to my mobile devices, watch, phone, pad, whatever you got, or just ding it on, alert me on the platform, all the above. Now, just because it goes up to that price doesn't guarantee that it's going to go up higher, but many of us might say that's not a bad sign, okay? So make sure you're using the alert functionality. Now, I also want to go back to just what other stocks are standing out a little bit here today, and I want to hit questions. One of the other ones that I'm not going to be able to get to, at least right now, speaking of stocks that might be making brand new highs, is IBKR. This kind of has, if you are someone that says, James, I really like these cup and handle type patterns where there was a base of support, and that base of support created a resistance, and it broke out, and it went to the upside, it pulled back, and the pullback stayed above where the breakout area was, pointing to the breakout. You're now going to see that the stock actually then had a prior high. It goes to a higher high. When it went to a higher high, it pulled back. And that pullback is higher than where it was previously. Welcome to what we call higher highs, higher lows. So one of the other stocks that's been quite strong here, trying to break out from a continuation pattern, is IBKR. Now, let's go back to something for just a second, okay? Make sure we're just crystal clear on something. Number one is, what we talked about here today was, man, getting used to the Schwab.com website. Man, it's a really mistake. You could have the information right in front of you, but we want to know, how do we learn to use the information? Where is it? How do you learn to use it? How do you read it? Second thing we want to be made aware of is your investing journey is not on your own, okay? Schwab.com, all of our clients, we actually, provide these classes live and recorded. Not all of us are in the same central time zone. Some of you are in Saudi Arabia. Some of you are in Spain. Some of you are down in South America or over in India. We know that, okay? Welcome to all, okay? Now, the other thing is we want to kind of make mention of is if we went to, let's say, this page, Schwab.com coaching, just real quick, is you can actually see, if you went to that page that I sent you, live webcasts and virtual workshops, this is where you could see a calendar, historical and current and forward, of classes that we're going to be doing over time. So in other words, this is like a menu. What do I want to learn about? So if you actually said, James, I'm really interested in, let's say, how would I trade price patterns? Or how would I get started by using the Thinkorswim platform? Or what if I wanted to just use indexes and trade options on those indexes? Or, James, I've never invested at all. What is a class for, let's say, stock investing for beginners? This is where everyone actually has a little piece of love here, and they can learn no matter what. Oh, James, I just want to learn about dividend stocks. There you go. Or how do I learn actually how to trade and ride trends? Whatever you want to learn, it's right here. Come get it. Okay. How much is it? A round number called 0. Okay. Now, if we take a look at this, I also want to make mention, let me send that link to you. that is it's going to show you a historical calendar, but also going forward as well. Now, speaking of actually going forward, our next session that we're going to have coming up next is clicking on managing an options portfolio. And if I actually clicked on that and went back to that, let's just move right back down. You're going to see our next class right there with Michael Fairborn coming up next. Want to say thanks to Connie for answering those questions in chat. There's a survey. It just has 2 questions. Click on it. If you enjoyed today's session, if you said, man, I really liked today, and I actually want to come back. I didn't valued as a client. And we thoroughly mean that, okay? And you're in the investing family where we all like to learn together. Now, remember, with what we discussed, it was done for example, illustrative purposes only. Remember that also all investing involves risk, and we talk about what some of that risk is here today in our examples. Thanks again. Stay tuned for Michael Fairborn coming up next. And with that said, have a great day. Take care. And don't forget to subscribe as well. Bye-bye.